Good morning, everyone, and welcome to today's webinar, Insurance Made Simple by CLS. My name is Bronwyn Townsend, and I'm part of the marketing team here at InfoTrack. I'm delighted to be joined today by Robin Wells from CLS. Today's subject explores the basic principles and some of the misconceptions around insurance. Throughout this morning, which we anticipate to take no longer than 40 minutes, I'd just like to draw your attention to the Q&A tab on the webinar software. Please type any queries in here and we will get back to you at the end of the session. So Robin, thank you for your time today, and I'll now pass over control for you to proceed with the presentation.
Oh, good afternoon, good morning everyone. Good afternoon everyone. My name is Robin Wells. I am Head of Sales and Marketing for CLS. I've been in the property industry now for roughly longer than I care to remember, probably 21 years, and I've been involved with conveyancing, estate agency, and many property related industries. So one of the things when I came into the industry, into the insurance industry in particular, was I needed to learn a lot. I needed to learn a lot about insurance. And my own kind of way of learning is to break things down into the basics and how we think about things, why people buy things, what do they buy them for, and what do they use them for. So I'm going to share some of this with you today. I hope you find it useful. And as I say, this will probably be the first of several insurance webinars we do with InfoTrack. So this is kind of grassroots, because it is our kind of responsibility. And I make an apology that, you know, we as the insurance industry assume that you in the legal industry know everything about insurance, where that is not the case. It's our responsibility to help you understand and help you along the way and help you advise your clients. So we're going to tell you just a brief introduction to CLS and the definition of what is insurance, because that's what we're talking about. You know, that this is if you know what insurance is and the concept behind all insurance, it will give you a different thought process as to when you're choosing it, when you're buying it. So we'll have a look at some of the most common policies, a couple of misconceptions around those as well, some case examples, breaking down the policy in terms and references. That is specifically to help you in your practice. And I'll elaborate when I get to those particular slides. Have a quick look at what's new and what's coming up, and closing questions. Before I start though, a bit of housekeeping. This is an important notice. Obviously we've been working with InfoTrack and obviously selling title insurance for quite some time. In order for you to handle insurance or buy insurance on behalf of your client, you need to be on the EPF, which is the Exempt Professional Register. Okay, just to explain briefly what this is, you are not required by the FCA to be regulated, but you are handling an FCA regulated product. So by means of your own compliance, you need to be on this register. So whether you are a solicitor or whether you are a licensed conveyancer, you need to check before you sell insurance that you are on the register. You can check either through the SRA or through the CLC, respective of which organisation you're regulated by. If you are not, or you check the register and it turns you are not, you can apply in writing, and it's a very quick process, either to the SRA or the CLC on these websites I've given. I'll just give you a few moments to probably jot those down, but you will be getting copies of the slides anyway. And request that you are added to the EPF register, which means you'll then legally be able to buy and handle insurance on behalf of your clients. Okay. So CLS are one of the most reputable transactional and development risk specialists in the City of London currently. The transactional work we do, which is a lot of what you guys do in your everyday conveyancing lives, is title insurance and legal indemnity insurance. But apart from that, we also do large disputes and development risks, such as things like rights to light, where you've got high centres of development. And that's not just London, that's across the UK in major towns and cities. So we are a very reputable company. So I've been in this industry, as I say, for quite some time. I'm only too aware all of the things that you guys are having to kind of put up with or have to go through at the moment. I attend a lot of CPD seminars myself, so I know you've had big changes in compliance, anti-money laundering, and obviously the increasing threat of cybercrime. So this, even though we're talking about an FCA regulated product, I'm not asking you to change the way you do things. I'm just kind of asking you to consider the way you think. So, and to top all of that, there's now the GDPR, oh my days, coming in as well. So I do appreciate that all of the things you're having to contend with on a day-to-day basis. But hopefully what I tell you today should just make you think slightly different and make your life a lot more comfortable. And obviously, so just a few facts here. Title insurance is an FCA regulated financial services product. Okay, so a lot of the changes we make, so the FCA, I mean, in a kind of, in layman's terms, is our version of your SRA. I mean, the FCA regulate everything we do. They audit us and they make sure we're doing things the right way. Title insurance has become a normality within the conveyancing process. Yes, it has. I think it's very useful. I certainly don't think it's a negative thing. It certainly helps you get from A to B and can unblock some of the pathways in the conveyancing process. But it's just a case of understanding and ensuring you buy the right insurance for the right problem. Online policies account for the largest part of the residential transactional market. I'm not going to get too much into that now because we're going to cover that on a different slide. Commercial transactional conveyancing uses offline policies more frequently than residential. And once again, we're going to cover that on a different slide. InfoTrack through CLS offer both online and offline bespoke policies as part of their service to clients. So if you're like me, you may be new into conveyancing, you may be a junior conveyancer or just qualified, and you think, I've got this tool to use called legal indemnity insurance or title insurance. I want to know what it is. Okay, so if you put it into Google, it would say that, and I will try and read this out the best way I can. It's written very badly. An indemnity against the risk that an insured matter relating to ownership and or use of an interest, got on board with this already, in land or the processes and rules relating to the transactions with it which existed when the policy commenced causes actual financial loss. So you didn't know what legal indemnity insurance was, so you read that and you probably still don't because it's gobbledygook. Legal indemnity insurance, and in fact, in fairness, you could take off legal indemnity on there and just put insurance, protects against the potential risk of financial loss, period. That is it. That's all insurance does. One thing it doesn't do, it replaces and takes the place of nothing. Okay. It's not a get out of jail free card. I'm going to say something now, which I'm going to refer to back to on a couple of other slides in this presentation. And that is pain before a claim. Okay. Insurance is there to protect against the risk of financial loss. In order for you to be in that position where you are at the risk of financial loss, there is going to be some pain. There is going to be some stress. By having insurance does not wipe all of that away. Insurance covers a risk. Okay, where there's risk, there's pain. So anybody who thinks they have an insurance policy and nothing is going to happen because they have an insurance policy is very misguided. So right back to basics now, right back to basics. So we all use it. You can, and I've done this presentation or a version of it various times. And what people have generally said to me is, I've gone back home and I've gone through my filing cabinet if they're that organised, and they look through their existing insurance policies for all these kinds of things and check some of the things I've said. So the insurance policies, insurance we're most likely to come into contact with: car insurance, travel insurance, buildings and contents insurance, appliance insurance, life insurance, health insurance, indemnity insurance. So what do they all have in common? They all evaluate the level of risk against the value of probability to calculate their premiums. Okay, now what that means, if you look at this a bit closer, I'm a prime example of moaning and complaining every time I renew my car insurance because the premium's gone up. Car insurance goes up because people have accidents. People crash quite a lot. And so that the insurance premiums on that kind of insurance are expensive because insurance companies have to pay out a lot of money for claims. Travel insurance, you could argue, is quite a low-cost insurance because the claims on that are fairly common, but not that common, and the amounts paid out are huge. Buildings and contents insurance is quite cheap. Buildings and contents insurance is actually very similar to indemnity insurance, believe it or not, because it's what you'd call the peace of mind insurance. A peace of mind insurance is where you have something in the worst case scenario, you know it's there, so you are comfortable that it's there in the rare instance that you're going to rely on it. Appliance insurance is kind of middle of the road. I mean, the problem with that is if you moved into a brand new house tomorrow and bought all new appliances, they would probably all break on the same week. That's the way it usually goes. So appliance insurance is actually not that cheap. It's quite expensive because it's claimed on quite a lot. Life insurance is quite expensive for obvious reasons, as is health insurance. People get ill and they claim on it, so the insurance premiums are higher. But it is quite simplistically, that is the way insurance companies calculate their premiums. It's all on the probability and the frequency of risks and having to pay out for the events when they happen. So why do we buy insurance? What is the thought process behind buying insurance? Well, cover to be legal is one. I know when I, for example, when I bought my first car when I was probably 18 years old, rushed off down to the insurance brokers on the high street because I just wanted some insurance to be legal. So my car was taxed, it was MOT'd. Scant or little or total disregard to the policy I was buying. I just wanted to get in that car and post with my mates. So it was covered to be legal. A means to an end. In some circumstances, that is your insurance. Your insurance you buy, your title insurance, is a means to an end, isn't it? Because you're in the conveyancing process and you've come up with a problem with title, and it's potentially going to cause you a delay. So the insurance is a very efficient way of keeping that conveyance on track, and so you can meet your deadlines in terms of exchange and completion. So a means to an end. It could be a requirement. It could be a requirement from the lender. The lender might require the adequate. I don't know how they word it. I think it's the adequate insurance to be supplied. So you will buy insurance so they are comfortable with lending the money to your client. And past experience too. If you've ever lost a sum of money from something that could potentially have been insured, you're probably going to insure it in the future. It's fair to say. And peace of mind. So peace of mind, you could argue, is kind of a funny story. And someone might have asked me this later, but I'll cover it now. Is that no search chancel insurance? We as a business expected chancel insurance figures to drop because a lot of the parishes have registered their interest now. So you would have imagined that this would have disappeared. But obviously in that period of time between 2014, a lot of land that was previously unavailable for development has become available, which also has chancel liability. So, but because of the low cost and the infrequent claims on chancel, remember what I said on the other slide, the probability is really low. It's a very cheap insurance policy, so it's a peace of mind. That's why we think we still sell quite a lot of it, totally out of our control. But I think people will buy it because it sits there. It's cheap, but it covers you, and it's just a peace of mind insurance policy. So how do we choose it as consumers, not as lawyers, but as consumers? Well, there's a meerkat tells us how to buy insurance, and as well as a meerkat, there is a fat opera singer that also tells us how to buy insurance. Now, it seems quite funny, but I mean, actually, it's completely wrong. What these companies do is wrong, because these companies do not make money from selling fantastic insurance policies. They make their money from placement from insurance companies and brokers. And the more people that place their adverts on their sites, they make more money. They have just so much disregard to the quality of insurance policies that sit on their sites that it would probably be very, very unwise to use anyone that you've never heard of, but I'll cover that a bit later. So my advice is even if even if you are using a form, a kind of reasons why form as to what products you're offering your client, do not make that decision based on price. Okay, and we're going to cover that a bit later. So how should we choose it as conveyancers? Okay, putting aside the meerkat and the opera singer, how should we choose it as conveyancers? Well, the first thing is, what is the risk? Okay, what is the risk? What is the potential risk to your client? So whether it's a problem with title, even if it's chancel, what is the risk? Establish that. How may that impact your client in the future? Because one of the things that is really important, a message I want to get across, is a lot of the, or more, 100% of the issues that you buy, or the risks you buy insurance for, will happen a long, long time after completion. Okay. But ultimately, you are buying something, you are choosing something for your client that they are going to rely on in the future. So how may that impact your client? Is this a common issue? So if it's something you've come across before, you'll have a very good guideline as to where to go and which kind of policy you're going to be looking for. Is this something I have used insurance cover before? Exactly. What I would say in the circumstance where it isn't, is that it's equally important that you follow the first steps there, because if it isn't something you've insured before, that's when you need to take extra diligence to ensure that the insurance policy you're buying for your client is suitable. Do I have all the necessary facts relating to the risk? Okay, we're going to kind of cover that on statements of fact. Do I have a draft copy of the insurance policy? I think you should always read a draft copy of the insurance policy, and I'm going to tell you exactly how to do that later in this presentation and what to look for. Can I agree to the statements of fact? What is the term of the policy in relation to the risk? Okay, and this is all information that's so easy to get. It's so easy if you just print off or just read the example copy of the insurance policy. Are there any exclusions that would affect the validity of the property as well? And we're going to cover exclusions as well in a later slide. Does the level of indemnity cover the potential risk for your clients? That's quite an interesting one. You know, I mean, if you're buying a really, I don't know, if you are buying on price and you buy a really cheap planning and building regs policy for someone, and it covers them up to £50,000, okay, that's probably not going to be enough, because in worst case scenario, paying before a claim, remember, and the local authority has an enforcement order and they ask them to take down the whole 2-story extension they've got on their house, it's going to cost a damn sight more than £50,000. So you have to kind of consider that as well. And do I need further advice on the policy and the cover? I mean, I would always refer to this. Advice is free. If you are unsure, especially with an insurance product, advice is always free. You could be unsure about something. You could come to us, obviously through InfoTrack. We would tell you, no, the policy online is absolutely fine. You are covered. But it's always best to get that advice because it is free. So how do we choose it? Select your insurance based on the suitability of the policy. Okay, first and foremost. The quality of the insurer. That's quite a tricky one, isn't it? Because let me give you an example. If we go back to the meerkat, let's go back to the meerkat. Okay, I bought a new car and I want to insure it. So I spend 15 minutes filling out the new questionnaire online about my car and me and everything else. And right at the top of the list, there is an insurer called Whiz Bang Insurance, and it's £200 cheaper than everyone else. Well, the name says it all for me. I mean, I don't know who they are. That would highlight, that alarm bells, knowing what I know now, would start ringing, and I would be really digging into that policy and just seeing how rubbish it really is, because it probably would be. So the quality of the insurer is important. Make sure you use someone who's reputable, you're comfortable with, provides the adequate amount of cover. Level of loss is covered, and all of the previous list on the other slide. Okay, and then you can go compare apples with apples. And just to recap what I said earlier, you know, if you choose insurance based on cost alone, you may not be acting in your client's best interests. Okay, I 100%, appreciate there's a lot of conveyancers will get more than one quote on insurance, but don't make the decision on the insurance policy you give to your client be purely based on cost, because you may not be comparing like for like. Retrospective policy inadequacies could potentially come back and haunt you, with the fact being that if there is some pain and there is a claim and it doesn't pay out because it wasn't fit for purpose in the first place, they're going to remember where they got it from. So let's have a look at some common risks, or the most common risks, shall we say, online risks. So chancel repair liability, we've talked a little bit about that. That is still extremely common, as I said, because it seems to be a peace of mind policy now. People will just have it that if you are a law firm that has a searches pack, you'll probably have a chancel check or some chancel repair liability insurance in there. So it has become kind of a mainstay. If it was £60 a policy, it probably wouldn't be, but it is relatively cheap. Planning and building regulations. I think planning and building regulations, I mean, someone asked me this question before, is why do I think planning and building regulations is one of the most commonly sold title insurance policies? Well, I think there's lots of reasons, but I think one of the reasons is the complete hash the government made of permitted development. So I can't remember what year it was, but there was a new scheme to make it easier for people in times of kind of financial crisis, for people to extend their houses. So they introduced something called permitted development, where if you had a small house, a semi-detached house, you could build a single story 3 meters from the rear and detached 4 meters. But even that in itself is only scratching the surface. What they should have said is everyone who kind of does this should have a lawful development certificate to go with it, which you wouldn't have any problems. But I think it's been misinterpreted, and people have done things that they shouldn't have done. So I think but now that's coming out as people start to move house again, and we're finding all of these properties that haven't got the correct building regs and planning permission. Restrictive covenants, absence of easements as well. Enforcement of unknown rights of way or easements, and lack of search delay. Okay, now I think search delay is it's been around for quite a while now, but it's obviously there's factors that sit outside of anyone's jurisdiction is to help that along. You know, local authorities are under massive financial pressure. A lot of land charges departments are very poorly staffed. So I think search delays have increased because of that. It's not a search provider or a search provider's fault. It's just that's the way the local authorities are functioning now. So the insurance is there should there be a delay on getting any of that information back to you. So let's have a look at lack of planning and building regulations. So your client is buying a property, you've discovered during the due diligence process that planning permission cannot be evidenced for the loft conversion of the property. Your client therefore may be at risk that an enforcement notice could be issued by the local authority, resulting in financial loss to remediate the issue. Okay, so purchasing insurance at that stage will allow for timely completion of the sale and peace of mind for your client. It's pretty straightforward, or as the meerkat would say, simples, I suppose. So the misconception here, there is a misconception behind this, believe it or not. So, planning and building regulations. And this is true. This is something that I have been, on more than one occasion, been told. I have an insurance policy, including one of my friends. I have an insurance policy that means I won't get any bother from the local planning department. Remember, this takes the place of nothing, the insurance policy, okay? The policy covers any loss resulting from any enforcement action taken by the local authority and subsequent remedial or legal action, or the potential loss of property value. Okay, so it's not something when Mr. Building Control knocks on your planning department, knocks on the front door, and you go to your filing cabinet, get out your planning, building regulations, insurance certificate, wave it in his face and say, I'm okay, I've got this, because that's not the case. This is something that will only cover you for any loss from the preceding actions that could follow that. And when it says potential loss of property value, let me explain. if you buy, if you say you go to your estate agents and you buy a nice 4-bed detached house, okay, so that house is worth £300,000, probably not in London, but probably where I live, £300,000, and you buy it, and it turns out there is no building regs or planning permission for the double-storey extension that included the 4th bedroom. Okay, so the enforcement notice gets served, and the building inspector comes round and says, "You've not this extension has not conformed to building regs. You also have no planning permission. We deem this extension unsafe." Okay, so you need to demolish it. You need to take it down. So all of a sudden, your nice 4-bed detached house becomes once again a 3-bedroom detached house. So your £300,000 value house now becomes a £200,000 house. So what the insurance will cover is that loss in value between. Okay, that's just to make that clear, that it does cover that loss in value of the property. But it certainly isn't a get out of jail free card. If you can't evidence building regs and planning permission, there's always going to be the risk that it could be enforced by a local authority within a certain time frame, of course. Restricted covenant. A developer built 5 houses when he sold the properties on. He wanted to ensure that the properties were not altered in any way that could affect the way the houses look. In fact, some developers have to do that now. They have to look a certain way, especially with all the pressure on affordable housing. To keep local residents happy, they have to be built in a certain way. The developer added restrictive covenants on the title deeds, which restricted the purchaser from carrying out various works or carrying out works without their permission. And there's just a small excerpt there from the actual title deeds. So there's 2 scenarios here really. Online, so if you were just to buy insurance online to cover this, so your client is looking to purchase a property, but you know that an extension has been built that was in breach of the covenant from this conveyance, means that you could buy the insurance policy and it would cover any financial loss subject to the developer or neighbours reaping any benefits from any changes you have to make. Or there's a different scenario here. If you had the intention to build an extension that will be in breach of the covenant from the conveyance, okay, you can also have a bespoke policy that would cover you for financial loss there as well if they asked you to change it back. Okay, we're going to talk a little bit more about online and offline and bespoke policies, but there's usually a solution to everything. I mean, when it comes offline and things get more tricky, obviously the option B there is a lot more complex than option A. So in most cases, you would need to speak to an underwriter to get the correct guidance on that. This is a real one I came up with. In my past life, I was an estate agent. I'm still fundamentally a good person though. So the playing of musical instruments and the entertainment of livestock is not permitted after the hour of 10 o'clock in the evening. And I'm sure you've all come across things like this in practice. So what this was an apartment above a NatWest bank, which was probably built in the 1800s. And basically, in those days, people used to keep livestock. They used to sell them and eat them and kill them on premises, on site, in their houses. So this is what this restrictive covenant was. Okay, now it seems quite what should we say? A silly covenant, but obviously in the day it was quite a serious one, because if you're going to start slaughtering your animals at 10 o'clock, they're going to make a noise. So that is kind of one of the really old covenants. It certainly wasn't that, it certainly wasn't a party of animals. So, but you will probably come across quite a few of those, but they probably still need insuring as well. I mean, the chances of anyone actually making a claim or enforcing any of these would be very, very slim. So absent of easement, your client owns Little Housestead Farm in Maidstone, highlighted in green, and Yelstead Lane, which leads to the property, is unadopted, and they do not have a documented right to use it. As they do not have a documented right to use the access way, this means that in theory, their right could be restricted. Okay, now I'm sure this is quite common. You notice the area of unregistered land opposite the property, that the access way may have the same owner. this landowner may choose to build on this land, and this could restrict your client's access. Okay, so there's two scenarios there, actually, not one. So what can you do? A, you could attempt to contact the owner to give you access and provide some kind of arrangement or agreement to gain access. This actually happened once with me, where we were selling a house. It was on a row of houses, and behind those houses was an unadopted road which was owned by someone, and behind that road was their garages, the garages to the houses. So in theory, someone could come along and say, you have no right of access onto that road to get access to your garage. But luckily, we found the owner in the end. We did a bit of investigative work, and we found out where he was. He was an elderly gentleman. He was totally unaware. He was absolutely totally unaware he owned it. He didn't have he took some advice from his lawyer, and luckily on that occasion he sold it. He just sold it to everyone, a joint agreement with everyone on that row of houses, and they bought it and they maintained it themselves. That was quite an easy way out. But you could insure it. Obviously, you take out an insurance policy. The danger is you could end up into a private agreement for access, which could escalate, and it could get very expensive. Put the price up every year. But the option B is to get an absence of easement policy, and that will cover any kind of cost and legal work that could need to be done in that particular circumstance. There is some small print down at the bottom. You can't use this insurance, and this is the kind of thing. These are exclusions. So this small print is actually exclusions, and we'll talk about exclusions a little bit. So this is where things you can't do with the insurance. I mean, I'm talking about things that insurance is good for. There's obviously some policies that there's things you can't do. So loss arising because you fail or refuse to contribute towards the cost of maintaining or repairing the access way. Okay, and the second one, loss arising because you interfere or interrupt another person's use of access way or services. Pretty common sense. I mean, this insurance policy will not pay out if you are a bad person and you are causing problems yourself. Okay, so there is a high degree of common sense that sits behind every policy, but it's always worth looking at the exclusions in the first instance. So reading and checking a draft policy, I certainly recommend, particularly if you don't check them all, I mean, at least check the draft policies if it's one you've never used before. Okay, because you will learn so much from doing so, because you will get more familiar with the layout of the policy and the terms and conditions and exclusions, etc. So there's two types of insurance policy. There's self-certification or online policies. These are straightforward common risk that falls within the statements of fact. Okay, so where you have issues like restrictive covenants and lack of building regs, the issues are very, very often the same. So what that enables insurance companies to do is to provide statements of fact to say, as long as you agree to all of these statements of fact, okay, and this particular case falls within those statements of fact, we can just provide you a policy that you can buy yourself online. That's pretty straightforward. If you can't answer even one of those statements of fact, or at least agree to it, it then becomes offline. Okay, so it's a bespoke policy. So that's unique or risks that fall outside of the statements of fact. The grey area in between is if you're not sure. As I said before, advice is free. You should always check. Because if it's just one of those statements of fact that you've agreed to and it's actually false, that whole insurance policy could become void. Okay, so it's always worth checking if you're unsure. So reading and checking the policy. We've said statements of fact are used as a method of streamlining the underwriting process and managing risk. And that's just recapping what I've just said. Okay, so when things become offline or bespoke. So these are some examples of a statement of fact. Now, I spent kind of quite a bit of time last year doing this insurance presentation to quite a lot of people, quite a lot of conveyancers and lawyers, probably about 400, I would say. And in every single one, I asked the question. You obviously won't get asked this today because you can't speak to me, but I said, can any of you give me an example of a statement of fact? And at 400, I got one person who gave me an accurate description of the statement of fact, which was slightly worrying because obviously these are things, this is the foundation of what the whole insurance policy is built upon. Okay. It's really important because it's there for a future claim. So if you've agreed to them, it's very relevant to something that could happen 3 years after completion. So please read them, check them. If you're unsure, do some further investigation, ask a client or call us. So never assume, never go to statements of fact, because the other thing, which isn't on a slide, do not also assume that all the statements of fact are always the same, because they're not. Various different insurance policies have different statements of fact to cover that particular risk. So never assume they're all the same and agree to them, because there might be something in there that you can't agree to. If in doubt, call InfoTrack and get the correct advice. It's free and it's dealt with within a couple of hours, which is an SLA we have with InfoTrack, and it's working really well. So don't think it's going to take forever. Okay, if it's best to be safe than sorry, just pick up the phone and get it checked out. So if, okay, for example, you have a bespoke policy. So the bespoke policy process is quite easy. It's quite quick. Contact is made with an underwriter. So InfoTrack will call us, we'll put you in touch, we'll put your client in touch with an underwriter, and they'll discuss the risk in more detail because there's certain questions they will have to ask. So the risk is assessed and underwritten. The premium is worked out, the policy is drafted and sent for approval, and the policy is activated and put on risk. You see, as a home buyer, I would be much more comfortable knowing I had a bespoke insurance policy that was specifically written for my particular property and my particular risk. You know, I would actually appreciate paying the high premium on that, knowing that it's absolutely fit for purpose. And don't always assume that it's going to cost hundreds of pounds more either. It doesn't always. You know, it's just that particular risk is discussed in detail and it's written into the policy, okay, because it might be different than the online one. So reading and checking a policy. Okay, there's two parts to this really. The schedule is basic information, always worth checking anyway, who the insurer is, what the property address is, the limit of indemnity, so the value of the property, the cost of the policy, the period it goes on for. Because I forgot to mention, you know, I mean, this is not just about checking the policy you buy. This is about checking the policy you inherit. So you will inherit policies in perpetuity from the other party. So you can have a look at them. You might notice now. You might go back and have a look at one when you get it next and think, actually, this is not fit for purpose. You're better off having another policy, or one that's more suitable, or it could be a bespoke one. So it's just that mindset. It's just that mindset of just knowing what to check. So look at the period, the insurance lifespan, insured risk, what it covers, and the type of property. Now, claims, conditions, and general conditions. If you don't do anything at all, what you should do is get your client to read this part of the policy. This is so important. In the event of the claim, the claim, this is what they can or shouldn't do. Most of it's what they shouldn't do, if I'm honest. It's like if you have a prang in your car, you don't admit liability. You don't jump out of the car and say, sorry, my fault. It's not my fault. Don't do that. In a nutshell, if I was to summarize claims and conditions, in the event of a claim, contact the insurer in the first instance. Don't do anything. That is it, in a nutshell. But it's really important that your clients understand and they read through that. Okay. Now, even if they don't read it straight away, they should always refer to it at some point, just so they remember. Because if they start entering into agreements with people when there's a potential risk and start offering sums of money for things, it could invalidate the insurance. So it's always call the insurer in the first instance. The usual housekeeping stuff, so cancellation rights, making a claim, so it gives you the address and the phone number for making a claim, and the complaints procedure if you're not happy and would like to make a complaint. And the insured risk appendix. Okay, so what it covers, any additional conditions of the policy, this will sit on the second page. Additional exclusions. So exclusions are the things it doesn't cover. A lot of them are quite common sense, if I'm honest with you. What you will find, and here's a little tip for you, here's something that you should bear in mind if you're using somebody else's insurance. I'm not going to mention any names, but you might pick it up and it'll only have 2 statements of fact. Okay, 2 statements of fact. So you think, well, that's great. You know, I only have to agree to 2 statements of fact. I can just buy this straight away. But rest assured, they will not be statements of fact because they will become exclusions. So when it's not got many statements of fact, it will have a much longer exclusions list. Okay, so we won't pay out if this house is not a single dwelling in England and Wales. That should be a statement of fact, but they'll put it in exclusions. It's remarkable. You will see it now, and you probably will go back and have a look at some of these. So always check the exclusions as well, and get your client to have a look as well. But this is part of the buying process, the insurance buying process. So it's best you check this yourself before you hand it over. Check it on the example. And what loss the policy will cover. So we mentioned that earlier. Just be comfortable in your own mind that if it looks slightly ambiguous or very low, then probably it's not a great insurance policy. It should cover adequate or more than enough for the risk that you're faced with at the time. Having told you all that, here's a very quick way of doing it. So every single financial product, you know, even your credit card, your house insurance, your bank loan, will have something called key facts. So if you want a very quick reference to an insurance policy, go straight to key facts. Okay, it will give you everything I've just told you on those 4 slides on 1 page. So it'll give you the type of cover, the benefits of cover, the losses covered, exclusions, cancellation rights, making a claim. Very quick reference. Okay, it's there for your benefit. So it's a very useful and efficient way of checking an insurance policy, and it's on all financial documents. Okay, so even if you're applying for a new credit card, it'll be on there as well, so you can check it. If you want to quickly, like, is this a great deal? Are there any exclusions? You know, I want to check the credit agreement that lies within it. It's all in key facts. Okay, so that's kind of a useful tool for you. Now, coming towards the end now, the other thing, another insurance that's becoming more popular, and I'm not going to dwell on this for too long because InfoTrack are running a separate webinar, which I'm doing actually, coincidentally, on the 24th of May, is contaminated land insurance. So contaminated land is an issue. It's going to become a bit more of an issue now because there is a lot of pressure for developers to build on brownfield sites. Now, for those of you who don't know what brownfield sites are, they're sites of usually previous industrial sites, which are usually highly contaminated. So what you're going to be presented with are lots of things, included an environmental report, lots of potential issues that could crop up later on. So I'm not going to go into this too much. I would suggest you probably join the InfoTrack webinar on that date. And we're going to go through insurance is just one of the solutions. That there are ways and things you can do for self-help to get over the contaminated land issues when they arise. So hopefully speak to you on that one as well. The other thing that's coming up, which is a good thing, is where we regularly get offline policies and the issues are identical. You know, we talked about statements of fact. With residential, you'll always note on residential title policies, there's probably about 30 of them. With commercial, there's probably only about 10. Because a lot of the commercial ones become offline and they become bespoke. But over time, a lot of those become quite similar and quite identical. So when we get to a level where we're confident that we can write new statements of fact to cover those, we can actually then put them online. So what you will see eventually is we're going to put some of those online. So they're easy for you to buy. Brings the premium down as well. So we will give you plenty of notice when this happens. Okay, we'll provide that to InfoTrack and we'll provide full details of these policies so you're informed well in advance. But it's a good move and it's a bit like general housekeeping. Over a certain period of time, maybe 5-6 years, you will take the policies, you will review the policies that you're doing bespoke wise, and if they are so frequent, you will move them online. Okay, with some minor adjustment to the statements of fact. So that's a good thing. That's real progress, especially if you're doing commercial conveyancing. So to summarise, please don't let price be a deciding factor when ordering insurance. Always check the statements of fact. Always at least read the key facts and check the cover before choosing. Where an insurance policy does not ask statements of fact, or very few of them, check the exclusions. If unsure, always pick up the phone and check the cover is sufficient for requirement. Do not always assume bespoke policies are a lot more expensive, because they're not. Insurance claims can happen a long time after the conveyancing process, but if a policy does not pay out, people will remember who sold it to them. InfoTrack will offer a full suite of online residential and commercial policies. They've also got, I've provided them with it's a new booklet we've just created, which looks into kind of the top 10 policies and the different things we do, and it gives a brief description and some case examples in there as well. So obviously, when I think I spoke to Bronwyn, and when she sends the slides out to you, if you want one of those, you can send one of those out to you as well. If you want to keep it on your desk and use it as a quick reference, that's absolutely great. Okay, so that's me done. Thank you very much for listening.